Hey guys, Mike Malarczyk at New Fed Mortgage. So check this out. On December 1st, the Federal Housing Finance Agency has eliminated certain fees on mortgages, which are going to impact about 20% of home buyers. It's a big time move that can lower rates and boost affordability for a lot of Americans looking to buy homes this year. So today I want to talk about these new changes, how they work, and who can qualify to potentially reduce your interest rate by as much as 1.75%. This is a big deal for first-time home buyers. They have been absolutely crushed by high home prices and high interest rates, and this is going to bring affordability back into the picture for many of them. So if you were getting quoted something like 7% maybe 3-4 weeks ago, as a result of these changes, now you could be looking at potentially 6% or 5.5%. So how does this work? Normally with conventional loans, we have something called loan level pricing adjustments, and that is based on risk. So risk-based pricing looks at factors like your credit score and your down payment, and then increases your interest rate based on how risky your loan is. So this is Fannie Mae's loan level pricing adjustment chart. Don't be intimidated or overwhelmed. I know there's a lot of numbers and a lot of percentages here. And basically what happens is I'm going to look at your credit score and your down payment to see what kind of upfront fee, which is called a guarantee fee or a G fee, is going to be added to your loan. So if you're familiar with the concept of discount points, this is very similar to that. So these G fees are adjustments which are added to the base interest rate, which based on the risk assessment is going to increase your interest rate. So let me give you an example here. So I've highlighted in yellow an example of what I would consider a high risk assessment. They have a credit score less than 620, and most first-time home buyers only put down 3 to 5% for a down payment. So in this instance, again, highlighted in yellow, we're looking all the way to the bottom right, 3.75% in fees would be added to their loan, which is going to increase their rate. A more common scenario, particularly for first-time home buyers, I've highlighted here in green. And you can see, looking over at the green on the right, 1.5% would be added to their loan. But with these changes, for most first-time home buyers, all of these fees have been reduced or eliminated. So to make things easier, I made this chart where I took all those numbers that we just saw, and what I want to simplify it here, and what I'm showing you here is what the interest rate reduction might look like as a result of these changes. So for instance, if you have a 720 credit score and you're putting 3% down, you're likely going to see a reduction of about 0.5%. Another example is if you're putting 5% down with a 640 credit score, you're likely going to see close to a 1.4% interest rate reduction. So you can use this chart to see how your interest rate could possibly change. If you were quoted 7% a few weeks ago, now you could possibly be looking at around 6 to 6.5%, depending on the market that particular day. So, if that sounds good to you. So who can qualify for these lower loan costs? So first you have low to median income first-time home buyers. So if you have a household income at or below 100% of the area median income for the area that you're buying in, you can qualify for that. Or if you are in a high-cost area, it's 120% of the AMI. We have two great first-time home buyers by Freddie Mac and Fannie Mae called Home Ready and Home Possible. In order to qualify for those, you have to be max 80% AMI. Also, buyers using HFA Advantage through Freddie Mac or HFA Preferred Fannie Mae. And then we also have some military options here. The other big requirement is that you must be a first-time home buyer. So a first-time home buyer is somebody who has not had title on a property in the past 3 years. So there's a couple of things I want to mention here. Number one, this is for new loans only, okay? It's for first-time home buyers looking to purchase their first primary family residence, okay? Number two, it does not work retroactively. So if you bought a house a month ago, I'm sorry, you can't use these new changes to refinance. And number three, The Federal Housing Finance Authority, they are the governing body that makes the rules when it comes to conventional loans. And this is a real concerted effort on their part to really help out first-time home buyers, where they've reduced or eliminated these fees. This is not a grant program where there's a set time frame, and it's not a specific fund where there's a set amount of money and once it's gone, the program no longer exists. That is not the case at all here. So if you'd like to learn more about this, please reach out to me. Call me, text me, email me, whatever. I can look up your AMI numbers. Let's make sure you qualify and see if we can get you into that first home. It sounds pretty damn good to me, right? All right, so Mike Malarczyk, New Fed Mortgage. Thanks for watching. Take care. Oh my God, I fumbled that. I was this close.